So credit. Okay, this is trade credit. This isn't about credit cards or anything like that. This is trade credit schemes. This is the classic giving people 30, 60, 90, 14, whatever it is, days time to pay for bills. It's a no-brainer, isn't it? Yeah, it's part of being in business. If you go and do B2B work, everybody does it, don't they? I think it's a little bit more serious than that. Because every time you take payment, every time you sell something without taking payment, you're effectively making a loan of your own money to that business. Yeah? And you're creating a debt where it would never have existed before. And you can guess what's coming around that, because that debt has got to be called in at some point in time. And there are all kinds of implications about how you go about doing that, and how you go about making sure that everything runs tickety-boo. Credit has to be managed. Yeah? As money gets tied up, as customers don't pay on time, it will happen. It will happen. You join the rounds of credit. The game in town with credit from suppliers and credit to customers. What do you do with suppliers? You try and extend your terms. Yeah, you pay your bills late. Yeah? What do you do with customers? You try and draw it in, make it as short as possible. Well, they're going to be doing that to you. So your customers are going to be trying to extend the amount of time they've got to pay you. By virtue of the way the system works, it's always stacked against you. So it needs careful managing and good relationships. It has to be managed. Otherwise you'll see dwindling reserves as you start paying out for goods and services that you have bought but not yet been paid for. Money written off as bad debt. If you start giving credit, it's inevitable that something will go wrong, that there will be bad debt in there. And a plunging credit rating, should you ever encounter the fact that you do turn out not to be able to pay your bills, it's not looked on at all well. It's very hard to get back once you've done it. Credit increases the financial and management complexity seriously of your business because of all this business to do with arranging terms, checking, pulling in the debts, and it also introduces what I've called life-threatening risks. Life-threatening risks is, if you start to get into that area where you're unable to pay bills, it's a really dodgy time. It will affect your credit rating, and that's like start a downward spiral. If it goes wrong, it's your loss, nobody else's. Yeah? The cost of bad debt far exceeds a lost sale. So whilst it may be, this is how businesses run, everyone gives trade credit. If I get a business customer asking to buy stuff from me and ask for credit terms, I should expect to give it. No, not at all. The risks are far too great. Why would they ask? Why do people say, we need credit? Well, there are all kinds of reasons, but here's a few. Here's the prestige. Well, we're a big and important business. Yeah? I don't know, name Asda want to buy computers from me. Wow, big and important business. Of course I should offer them terms. Yeah? But you're small and insignificant. Well, yeah, but I'm small, I don't have the cash. And you, large, and do have the cash. So give me the money, please. Thank you very much. Large businesses can always arrange to pay. And there's this thing about, it's normal business. It's not. It's not. Because if people are buying computers and equipment from you, it's a fixed asset typically, unless they're a reseller. Yeah? It's a fixed asset, and they shouldn't be paying for it out of their own cash flow. It should be funded as part of their reserves. So offering them credit is wrong. They should actually be going to the bank and getting a loan. It's a bit accountancy, but it's also true. It's easier. It's helping them out. It's easier for them, rather, is to do with things like pay runs. Yeah, we pay all our bills at the end of each month. Well, hang on a minute, that's going back into this whole argument about it being paid from revenue rather than from capital. And buyers will always ask for it. They will always ask for it. They've been programmed to ask for it. Why? Because it goes back to that old story about what's the game in town? Get the longest terms you can until you pay your suppliers. And a buyer will naturally ask for it. It's how they're rated on their jobs. And perhaps more dangerously, they're asking for it because they don't have the money and they're struggling. Well, the other reason is they're out to get you in some way. Yeah? And you're actually on the nasty end of what could become a really serious scam. The issue is the crooks are always plausible. The more dazzling they make the offer to you, the more dangerous it is. The more urgency they put on it, the less likely they are to actually pay. And there's always this point anyway, why would a big important company come and use a small supplier? What's really going on? Why are they doing this? In case in point in here, a really good example, I don't know if people have heard of a thing called long-term fraud. No, long-form fraud, I should say, long-form fraud. It's a customer of ours who went through this, and it's an absolutely classic example. Starts doing business with a customer, builds up a good level of business with this customer. Customer suddenly says to them after 9 months of trading, can you give me some credit? Well, business has been great. Yeah, they've always paid their bills, everything's looking tickety-boo. Yes, of course. Starts building up a credit debt. Can you give us some more credit, please? Still paying off their bills, but using the credit terms. Can you give us some more credit? Anyway, that starts to grow, and then suddenly it turns into a bad debt. Highly plausible. They're using the very fact that you are acting as the credit reference. Yeah, they've asked for credit and they've built up a good record with you, so of course you'll give them credit. It's really, really dangerous. These people are dangerous. They're always plausible, and they tell a good story when it comes to convincing you to give it to them. Only extend credit to businesses. Some considerations: set a minimum order value. Yeah, 500, 1,000, whatever it is for yourselves. Make it worth your while. If you're going to start taking these kinds of risks, there are a number of things you need to do, one of which is to make it worth your while. Two, if those payment terms are longer than shorter, so maybe over a number of months, think about standing orders, or indeed if you're running services to businesses where they might consider paying an annual service arrangement, get them to put in place standing orders. The reason for that is simple: it improves your cash flow because you're getting paid every month, but if something goes wrong, you get to hear about it early. The moment that first standing order doesn't come through, you know about it. That's providing, of course, you're checking your bank statements, reconciling. Be prepared to vary your terms, different numbers of days, from 14 days, 30, and all the rest of it, and vary the amounts. There is no one size that fits all. The question is, how do you work that out? We'll look at that a bit more. Manage it weekly. You've now got a job on your hands because you've got debt to manage. It's people owing you money. It won't come in of its own accord. Much of it will, but some of it's going to need chasing. The problem is you don't necessarily know which parts of it and when that might happen. So there's a whole bunch of activities in there about making sure your invoices are being received by the right people, there's confirmation at the time that your invoice will be paid on time, and that, for example, a week after it falls past its payment due date, that you're able to get on the phone to somebody you know and ask them about what's happened. Yeah? Not to be rude, just to find out and ask the question. And have a structured debt procedure, which is all about the different kinds of letters that you need to send before you go legal, which you might do that. So it's a whole load of new work that you might not want if you enjoy fixing computers. It's a whole bunch of stuff that's entirely new, different, and alien. Make sure your terms and conditions are on all of your invoices, and make sure that the appropriate parts from the Payment of Commercial Debts Act are included. What's that all about? That's about the 8% that you can levy and the structured debt fees that you can apply should everything go bad and you need to call in the debt using a debt collector. Okay? Need that on your terms and conditions. Credit will equal bad debt. An interesting one: if you do have a debt that goes bad and you are VAT registered, you can actually reclaim the VAT that you might have paid to the taxman on the outputs, because you never were paid. But no one will tell you that. No one will tell you that. You will have to identify it yourself. And make sure that you price bad debt in. So when you do offer credit, you have to think about the prices that you're actually selling at. Credit checking costs money. If you're going to sign up to a Dun & Bradstreet or an Equinox or any of these kinds of firms, there will be a fee. Fees are, to be honest with you, but there will be a fee. So it really becomes a case of, well, how seriously are you going to go into this? Are you going to start offering credit to an awful lot of customers, or is it just going to be here and there? If it was to a lot of customers, it's probably worth the investment. If it's just here and there, you might consider other methods. And another, this is no final proof, but at least if you're dealing with customers who have signed up to the prompt payment code, there's a little badge that goes with this on their letterheads, then at least it's a guide. It doesn't mean that they're necessarily going to honour it, but it's a start point. Another thing is to do some simple background checking yourself, and it's surprising how much you can do. So, things like, do you know them? What's their trading history? Do you know anybody else who trades with them? Would you know anybody else who knows anybody else who can trade with them? You know, talk to people in your network. Check their website. Any numbers that are on their website, call them up. Yeah? Google the business name. See what you can find out about them, particularly to do with adverse customer comments. The famous one is Street View. Marvellous, bloody marvellous tool. Yeah? Go and virtually visit them. In actual fact, find out where they are. Why not go there themselves? Go there yourselves. Knock on the door. Find out who they are. Ask for references. Obviously, they're going to try and give you good references, but follow up and call them. Follow up on them. Don't just accept the fact that they're giving you references. Talk to them. And if they're limited, I don't know whether you're aware of it, but the company has beta service. You can actually call up sets of accounts. It's free. Yeah? You can call up their last filed sets of accounts in full detail and just look at their trading history, see who the directors are, get a lot of information. I was quite surprised at this, because this must be relatively new, because before it was £1 or something you had to pay. This is now completely free. And yeah, it wouldn't be ShopTalk unless we've done a blog on it. We have, and it's called How to Implement Another Credit Control System, which covers the whole soup to nuts. If you go into the blog, type in any part of those words into the search area, you'll find the blog. That's just an example. We've got the follow-up letters. That's an example of one of the letters that you can use as a template.